Welcome to Wall Street Bets DD, where I read some of the most popular DD of the week in my action movie narrator voice. This is not financial advice. This is not even my post. This is just for entertainment purposes only. Since I know you apes can't read, I decided to read for you. So sit back, relax, and enjoy the shit show. Oh, and don't forget to like, comment, and subscribe, or else I'm telling your wife's boyfriend to cut you out of the will. Post by redeemed. Callaway smashing balls and earnings. So Corsair railed you in the ass and left you with nothing but a colorful gaming mouse and an empty bank account, but like a true Wall Street Bets degenerate, you can't help to think, man, if I could just nail one big YOLO, I'd be back in the green. Well, fortunately, I might just have that for you. Who doesn't want explosive ball speed and extreme distance? The golfing boom. I come to you bearing news of a stock that most of you probably don't have your eye on. It isn't big tech. It isn't a massive short squeeze opportunity. It's golf. Now, given that the majority of you likely haven't seen the sun in the last 3 to 4 years, you might be wondering who actually goes golfing. According to the National Golf Foundation, a lot of fucking people recently, while major airlines, restaurants, and Mickey Mouse's kingdom burned to the ground during 2020 lockdowns, golfing took off like a goddamn rocket. This is from the Golf Digest article. The NGF count showed 24.8 million golfers in the U.S. in 2020, an increase of 500,000 and 2% over 2019. It is the largest net increase in 17 years. Women golfers also were part of the 2020 surge, jumping 450,000 or 8% year over year and making up nearly a quarter of all golfers with a count of some 6 million. I'll post the other links in the comments for those curious. Moving on. Hell, the golfing boom wasn't just isolated to the US. Even countries like South Korea were having trouble keeping up with golfing demand. With tee times booked out across the world and equipment sales through the roof, things must look pretty good for the largest golf manufacturing company in the US. You're goddamn right. Look at those beautiful heads and shafts. Callaway is the way. Callaway, a brand we're all vaguely familiar with because our fathers refused to accept that we weren't the next Tiger Woods. Well, Callaway is no longer just Callaway. The company has been snatching up valuable assets left and right and building itself into a diversified cash printing behemoth. Callaway now owns the Jack Wolfskin and Travis Mathew apparel brands, but most importantly, motherfucking Topgolf. Last quarter, Callaway pulled in an EPS of 0.62 from its golf equipment and apparel business alone. This shattered analyst EPS estimates by over 400% and caused the stock to jump almost 20% in the following trading days. Here are just a few highlights from that Q1 earnings report. Golf equipment continues to experience unprecedented demand, and our supply chain was able to capture more of that demand than we projected. 29% revenue growth versus 2020, $85 million. Jack Wolfskin showed impressive resiliency despite European lockdowns, led by a 108% increase in e-commerce sales in Q1 2021 versus Q1 2020, and we feel increasingly confident in the future of this brand. Travis Mathew continues to impress and presents an even bigger opportunity than originally anticipated, led by a 145% increase in e-commerce sales in Q1 2021 versus Q1 2020 and a further strengthening across all channels. U.S. retail sales of golf equipment were up 72% compared to Q1 2020 and up 49% compared to Q1 2019, the highest Q1 on record and the third consecutive quarter of record sales. Needless to say, guidance was great and these acquisitions were smart moves by Callaway's team. But that all pales in comparison to Callaway's newest addition, Topgolf. In March of this year, Callaway committed highway robbery and finalized its acquisition of Topgolf for $2.6 billion in stock. I say highway robbery because prior to the pandemic, Topgolf had explored the idea of going public with numerous valuations north of $4 billion. After the pandemic hit, Topgolf took a nosedive and needed a quick exit strategy. Callaway swooped in and acquired them for pennies on the dollar. If you've ever had the pleasure of visiting a Topgolf, you'll understand why this acquisition was a brilliant move. But for the uninitiated, here are some quick facts. Topgolf generated revenues of $1.1 billion in 2019 alone. Pro forma revenue of approximately $2.8 billion based on fiscal year 2019 results that is expected to grow to approximately $3.2 billion by 2022 and at approximately 10% per year in the years following. Pro forma adjusted EBITDA of $270 million based on fiscal year 2019 results that is expected to grow to approximately $360 million by 2022 and at mid to high teens per year in the years following. Topgolf has been growing at an annual compound growth rate of roughly 30%. Getting piss drunk with your friends and smashing balls into giant RGB rings is way too much fun. Simply put, Topgolf prints money, and they're rapidly expanding. Globally, we have 66 company-owned venues in operation. For the full year, we are on track to open at least 3 more venues, for a total of at least 8 venues this year. We also remain confident in our pipeline for future venues. Callaway's Q2 earnings on August 9th will be their first earnings report to include Topgolf revenue, and average analyst EPS estimates are, I shit you not, 0.01. With golf exploding across the globe, Callaway's record-breaking Q1 numbers, guidance, and the addition of Topgolf's revenue, I see zero chance that Callaway doesn't obliterate analyst expectations. I could write another 5 paragraphs on Callaway's potential upside, but I understand that the average attention span here isn't great. This is not financial advice. This is a suggestion to look into the play, do your own research, and happy trading. TLDR, golf is booming worldwide. Callaway acquired Topgolf for an absolute steal. Q2 earnings call on August 9th will be the first quarter they include Topgolf revenue. Analysts are fucking stupid. Positions, 135 August 20th $40 calls, and 104 September 17th $40 calls. Let's see what some of the comments have to say, shall we? Alright, bought a call. Spin that roulette wheel. I work in the golf business. Have been for 25 years. We are on pace for the busiest year in the history of golf, beating out number 1 1997 and last year when we missed most of spring because of the pandemic. Everyone is slammed. I posted about Callaway when it was $15 and again 2 weeks ago with this similar info. One more nugget is tomorrow golf report earnings before the bell. This will be a great look into the golf business side. I expect them to also smash it. May see some spillover into Callaway tomorrow. On golf alone they would do great, but the Topgolf revenue too and earnings will be smashed beyond the over 400% surprise of last earnings report. Will this lead to a spike in share price? I hope so. 200 Callaway shares. The 15th of August 2033 call. The 25th of September 1733 call. As a relatively new golfer with almost all Callaway clubs, I support this message. Edit. Also, for those not in the know, there was an absolutely massive uptick in golf during the pandemic shutdowns, and it seems like everyone is sticking with it as things open back up. I personally know about 15 people that fall into this category with me. I also have a buddy who works at Golf Galaxy, and he said Callaway equipment is absolutely flying off the shelves. Well shit, if you've got Callaways then it's time to YOLO. Oh, I bought in a long time ago when my buddy that works at Golf Galaxy said they couldn't keep them in stock. But that was before I sold off my entire portfolio to YOLO into GME lol. I just reported you to the SEC for insider trading. Scumbag. I do all my trades inside. Is that an issue? If you enjoyed this video, be sure to like, comment, and subscribe, or else you will be forced to trade on Robinhood for the rest of your life.